Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good to have you back on.
Good afternoon, Devin.
Well, the global financial markets are taking a hit from the concerns about inflation in the U.S. A lot of opinions out there, but many say we need to prepare for interest rates to rise. What do you make of the situation, and how do you think it'll affect people's investments in stocks and real estate?
U.S. inflation is actually increasing slowly from the end of last year. The most recent U.S. inflation rate of January became 1.4% on annual basis. It is 0.3% higher than a quarter ago. U.S. inflation is still actually far below from the Fed's target inflation rate of 2%. But as economic recovery is evident and U.S. government's fiscal stimulus goes on, we have stronger inflation pressure. Due to this higher inflation expected, market interest rate or bond yield increases quickly in both of United States and Korea. Since recent boom of the asset market, particularly in stock market, has been led by ample liquidity, there will be some adjustment in asset markets due to higher inflation.
Well, in Korea, it seems right now that inflation is being driven by pressure from the supply side rather than demand. Groceries, for example. Tell us about that and what might be done to keep it in check.
In Korean economy, recent higher price level is partially generated by oil price increase, raw material price increase, and agricultural product price increases. Since we import most of these materials and agricultural products, unfortunately, Korean economy does not have much control on this production factor price-induced inflation. We have to wait and see whether these prices go up further. But if price increase continues, there is a possibility of stagflation, which is a combination of recession and inflation.
Well, turning to the stock markets, Wall Street overnight had another big dip, another surge in bond yields, dealing a blow to tech shares. Energy and financials, on the other hand, with a decent gain. What's the story in the global markets?
These days, the most influential factors to global stock market are higher inflation and interest rate increased interest rate. Yesterday, U.S. 10-year Treasury bond yield increased by 0.1% in a single day, up to 1.5%. This higher inflation gave a negative impact, particularly on high-tech stock enlisted NASDAQ. But pro-cyclical stocks like energy and finance stocks increased due to expected economic recovery. Dow Jones Industrial decreased by 0.4% yesterday, and NASDAQ decreased in a larger scale by 2.7%.
And a similar story in the Korean markets. All three main indices down. The Kospi around 1.5%. Tell us about the local market.
As U.S. interest rate goes up yesterday, domestic market declined seriously today. As U.S. interest rate goes ups and downs from last week, domestic market became much more volatile than before. Over the last 2 weeks, we saw a 3% daily increase and 3% daily decrease. Kospi had a negative 1.3%, and Kosdaq also lost 0.5% today. Particularly, even though individual investors purchased over 2 trillion won stocks today, Kospi dropped due to foreign and institutional investors' aggressive sales.
And we do see Korea's exports recovering. Last month, the daily value of those shipments rose to a 9-year high, and exports increasing in most of the main categories. Tell us a bit more about this recovery and if you think it'll go on.
Korea's exports expanded by 9.5% last month, posting the best performance for the month of February in 9 years. It is an impressive achievement under difficult situation over pandemic. Export began to picked up from November of last year, and after that, Korean export is increasing almost 2 digits every month. Export increase is, of course, related to global economic recovery. Particularly, major export items are leading overall export increase. In February, semiconductor export increased by 13%, and automobile export also increased by 47% on annual basis. As COVID vaccine is more distributed, Korean export will continue to increase by the end of this year.
And finally, Professor, before we go, I want to ask you about the preliminary data from the Bank of Korea showing that last year Korea's per capita gross national income declined. It came to around $31,700 per person. But interestingly, even before the pandemic, it declined both of the previous years too. So what explains this decline in per capita GNI?
Well, of course, the decrease of the personal income of last year is related to pandemic of coronavirus. But I think as Korean economy is rebounding due to the distribution of COVID vaccine and export increases, I think we will recover the previous level of GNI by the end of this year.
All right, Professor, we hope so. Thanks so much for sharing your insights with us today, as always. Appreciate it.
Thank you very much.